Howdy y'all, Stock Warden here, back with another video. In today's video, we're looking at Xylem Incorporated and how the stock over the past month that we've been covering has somewhat stayed on an average trend. We looked at this stock back on July the 8th. And on that day, the stock ended up closing at $118 a share, and they are currently at $120 a share going into this week. So, as it stands, they have been doing a lot of great work, and their Q2 analysis has finally come out, and also the analysis has beaten expectations, which is an amazing feat. But to say it's an amazing feat, they have been continually doing that since Q3 of 25. So as far as a physical year's standpoint goes, they have been beating the estimate for their quarterly earnings for at least the physical year. So to kind of get a little bit deeper dive into their Q2 adjusted earnings plus revenue increases, they ended up having a earnings of $1.46 a share per diluted share, which is up from 126 a year earlier. So analysis polled by FactSet expected $1.34 a share. So that's a good sign. Then revenue for the quarter ended June 30th was at $2.34 billion, which is up from $2.3 billion a year earlier. So the analyst expected $2.34 billion, and they hit that marker. So for 2026, the company has raised its adjusted EPS guidance to between $5.55 to $5.70 per share, from around $5.35 a share to $5.60 a share. And now they are expecting revenue of around $9.2 billion versus a prior range of $9.2 to $9.3 billion. So while analysts are expecting 5.5 to 9.25 billion respectively. So with that, the shares are kind of trending in a even pattern. So there is a definite neutral flag happening right now. So the stock was on a amazing bull run, and then here we have this absolute flag coming into a solid peak. As you can see, we had our highest tip at 127 a share. So, and it has come down into this 120 a share. Then you can also see where they have been as low as 115 a share, and they have still made it back up to the 120 a share. Definitely testing out some heavy resistance lines, especially you can see a good resistance line here between 113 and 114 a share. So I'm just going to go ahead and draw one at 114 a share across the board. So then you're able to really be able to see that they still are bouncing off the bottom of this resistance and still coming up to a good midline, which I would say is at the 120 marker. So to go from there and to be able to have a 120 midline and then having a upwards of 125 on a higher resistance line, it's showing that this flag seems to be more of a bull flag than it is a bear flag. So, but there's also a lot of great things that are happening with this stock that is going to just about prove that this is a bull flag and not a bear flag. So, because not only did all of the great things come through with their Q2 earnings report, with them beating out expectations, along with a slew of other numbers that came in where they are a multi-billion-dollar company. They also have been able to look at buying, well, I say buying, acquiring a new company where Waterfleet is a leading provider of mobile water and wastewater utility services and workforce relief solutions. They announced that a subsidiary of Xylem, which is one of the leading global water technology companies, they signed a definitive agreement to acquire Waterfleet from investment funds managed by Eagle Tree Capital and its co-investors for approximately $200 million. So not only do they have a revenue boost and beating expectations in their quarterly analysis, but they are also still beating out a lot of their new competitors that they have had by bringing in more acquisitions into their company, which is one of the big reasons why they are as large as they are, because they have a pretty decent acquisition list for the past couple of years. So, and not only that, they have a massive slew of new price targets and ratings. So I'll go ahead and rattle off quite a few of those. So remember, as of right now, we are at 120 a share going into this week. UBS has adjusted the price target for Xylem to 135 from 129, holding a neutral rating. Stifel maintains a buy on Xylem and raises their price target to 160. Mizuho maintains a neutral and raises their price target to 130. RBC Capital maintains an outperform on Xylem and raises their price target to 164. Barclays maintains an overweight on Xylem and still raises the price target to 159. RBC raises a price target to 164 from 159, keeping a outperform rating out on them. Baird is maintaining an outperform on Xylem as well, raising their price target to 165. And then a Deutsche Bank adjusts Xylem's price target to 151 from 149 with a buy rating. And then finally, what I have from JP Morgan is adjusted their price target on Xylem to 137 from 130 with maintaining a neutral rating. So we have stock price targets from anywhere as low as 135 up to as high as 165 at this point in time. So standing at a 120 market and looking up at a 135 to a 165 target, that definitely shows something that would definitely have most investors feeling good about this company, especially having such a large amount of companies putting in different price targets, and also most of them holding a buy or outperform rating on their price targets as well that they continually have been raising. So that is definitely a good sign for Xylem, and all of that is the main reason why I believe what we're seeing here with this stock over the past month is going to be a bull flag instead of it just stalling and going back out and down. I believe it should start trending back up, especially into these new price target ranges. So that is everything that I have on Xylem Incorporated as of right now. So I hope y'all enjoyed the video and was able to get more information on Xylem to help you determine on your new
possible standing on your portfolio, and or if you want to add any more into your portfolio. So don't forget to like, comment, and subscribe, and I will see y'all in the next video. So this is the Stock Warden riding off. Now y'all come back now, you hear?